Is that helping at all? I'll just restart it if it's still the case. So use your words. Tell me if we're good. Because I like StreamYard said that my mic was running fine before. All right. Thanks, We Tire on Dividends. I appreciate that. So I'll go back. I'll go back to the beginning and just cover the ground where you couldn't hear. So this is classic pump and dump right here. We touched $6 and then had a bleed off. This is pretty normal behavior when the stock has very low volume. Curious to see what happens in the last 20 minutes, but it's probably just going to kind of fuss around in this sideways slightly down area like it always seems to do. Now, there was recently news that this guy from Sugarland, Texas bought like 6% of the company. And so that may have been a big part of the recent price run up that we've had because he acquired millions upon millions of shares to do that. The shorts like Fraser have been talking about maybe he's trying to initiate a short squeeze and that kind of thing. I don't know if that was strictly the intention, but it did surprise me for the longest time that no whales got involved here to like kind of take advantage of how shorted it is compared to the actual value. But I digress. Now back to Intel because that's probably the more interesting story today. Intel shares pop up on report that Qualcomm has approached it about a takeover. So the basic thing here is, generally speaking, the reason the price went up is because when a company moves to either take over or buy out or merge with a target company, usually it's for a substantial premium off of the market. Yeah. And Intel has been battered to bits, almost to what is, I would say, I dare not necessarily call the absolute bottom, but these upper teens to low 20s for Intel is very, very, very bargain basement level for any chip maker, really. You would really have to believe it's going away to think that it's worth less than the range it's been trading for lately. So if there's interest in acquiring them, it makes sense to take a shot from this level because you like, what do you really have to lose? And if you're like me and you've been in it for a long time and you've recently gotten absolutely walloped by this share price collapse that they've had this year, well, any positives or anything that might result in you, recouping, you like to hear it. APP. Yeah. APP. Apple Oven. Oh, yeah. I remember this. Yeah, I mean, it's definitely interesting, but I don't think it's worth 60% more today. Maybe it was worth this price all along and it just corrected itself to the right price, but I don't know, it looks a little expensive on the surface. Uh as far as high tide, it's kind of doing what it does, right? They have a really good earnings report, and then the stock kind of bleeds off for a while. According to Blake, this happens like every time. So I'm just gonna sit tight, and if it gets below $2 again, I'll probably add some more to it. Since the fundamentals keep getting better and we keep getting opportunities to buy it at a discount, I'm going to definitely look to take advantage of that. And I think high tide is more obviously cheap than some other possibilities, right? 8.7 times free cash flow, which, by the way, their free cash flow is not as high as it could be because they're spending a good amount on opening new stores. So this price to free cash flow is actually deceptively high compared to what they could actually produce if they just ran with the stores they had and didn't focus anything really into growth. So, yeah, high tide, quite good. Hoping that we see that reflected in. Has nothing to do with shipping. Um, I don't think I ever said it had anything to do with shipping. It's Canadian cannabis. I don't know where this shipping idea is coming from. It's a retailer. Yeah, where did the shipping idea come from? That's okay. Zeta is great too. See, I haven't heard of that. Sounds like something Gen Alpha would invest in. Yeah. Omni-channel data-driven cloud platform. Okay. Um that sounds a lot like a lot of companies where I would have trouble identifying exactly what they do. We tire on dividends, bongs and crack pipes. Exactly. That's the business model. High tide like water. Yep. It's or you could say a rising tide lifts all boats. And you could say that the cannabis sector, as new markets open up, may be a rising tide. So might be that. I feel like the name may have layers to it as to why it's apt. Speaking of shipping, though, since you gave me the segue, we've got Amazon touching 190 again. The funny thing here is my initial, I don't know, 5-10 shares were when it was starting to come down from the 200 that it touched earlier this year. And I simply had the goal of, while it was dropping, to get my cost average as low as possible and get to 100 shares before it got up to 200 again, which I have accomplished that goal. So I'm very happy with how things have gone so far with Amazon since I've been buying it. I know that it's not really on brand for me to buy a very high cap tech company, but Amazon has so much going for it, such a moat. and an undemanding price to operating cash flow, which they can turn into progressively more and more free cash flow. They've started that process, but they still invest a lot towards the future. And yeah, overall, I would definitely be surprised if the future for Amazon wasn't brighter than the present or the past. They're so ingrained into our way of life. Like Amazon literally changed our way of life, like how we do things. They changed how we, like, what our expectations are when it comes to e-commerce. They changed like I think back to what it used to be like to order things before Amazon. They've successfully actually done a good job making us all a lot more impatient. I think we sort of expect uh, very close to instant gratification now, because it's like with Amazon you can order pretty much anything and have it in a day or two. In most cases, there's exceptions, of course, but nowadays if you order something and it takes like 3 or more days to reach you, it feels like you waited forever. And that, of course, it used to be the case where you could be waiting 2, 3, 4 weeks for different things. You would order out of like paper catalogs and stuff. Sears would have been like the king of shipping products from their catalog back back like 30 years ago. And of course, with Prime, they've got an unbelievable network effect. They have, I was reading something like it was either 180, 185 million or so individual Prime accounts. There were, I think that it was like the stat was something like there's more individual Amazon Prime accounts than there are like households. So there are some instances where you have multiple people in the same household with their own individual Amazon Prime accounts. And that's pretty incredible. And that audience, that 180 some odd million person audience, these are all consumers that anything Amazon adds to what they offer the consumer, they can basically instantly put it in front of the eyes of that number of people, which is absolutely incredible. So they basically built that with just their basic e-commerce, the random bric-a-brac that you can just order and have on your doorstep in a day or so. Dissecta, he buys Amazon. When it dips, he buys AMZN. Rings of Power, yep. And that's not even getting into what they have with AWS and all the enterprises that utilize them for their cloud computing and stuff like that. It's massive opportunity. And they seem to just, I don't know, be almost insurmountable and unstoppable. Amazon getting into the pharmacy space, into the ad revenue space, which they're expected to grow pretty handily. Like this could be a thing where not only are they the king of e-commerce, but they're also competing with the Googles and the Metas of the world. With Prime Video maybe competing with the Netflixes and the YouTubes of the world, right? It's pretty crazy. And they do it well. Howdy, partner. So yeah, I'm pretty excited for what the future holds with regards to Amazon. Now, this is another thing where I changed my allocation into a lot more BTI in the last few months. Actually, before a good amount of this run up happened, my shares are pretty much all low 30s is pretty much where I got in. So I'm still doing pretty well. Of course, this little sell off we've had here recently is a little bit disappointing, but I think people are doing a lot of repositioning with the rate cuts and everything like that. And in the long run, as rate cuts continue, I do think you'll see uh, more money flow into these solid yielders that generate that consistency over time. Because at the moment, the rate cuts haven't. I don't think the effect of that is fully settled in yet, really. And the anticipation of it, of course, priced it in to an extent. But it's just the first one, right? And I don't think people are ready to go all in on consumer staples and whatever just yet. But BTI does offer a total yield of almost 9%. 8% of that is dividend. About 1% is buyback. However, I think next time we see data from earnings, the buyback portion may be higher because they have been at a pretty undemanding valuation. We have a price to free cash flow of 6 on this. And a lot of my shares were bought when it was like 5. So I've gotten a little bit of multiple expansion on it, not tons. And I'll collect the yield while I wait for that multiple expansion to happen. I think like a 10x price to free cash flow is pretty reasonable for this. And the yield would still be decent. I think it would be like 4% or something at that level, something like that. You'd have to do the math. And that's like minus buybacks. That's just dividends. Actually, no, it would be like 4.5%, 5%, maybe even. So still pretty decent. And if the rates you get on bonds are lower than that, then this seems like the better opportunity for people looking for yield. That's the key. And just with one rate cut, that may not be the case just yet. So, but after a couple more rate cuts, I think people will start to be like, okay, bonds aren't really giving me that much anymore. Let's see what else I can get. So you'll see your BTIs, your MOs, your PMs, even maybe like your AT&Ts and Verizons and stuff like that start to get a little bit of juice. Theoretically, that's how it's supposed to go on paper. It's no guarantees, though. No guarantees. Also, by the way, we were talking about High Tide earlier. I also want to give them some credit because they have a very cool CEO. He confirmed for me on X, which, by the way, if you're not following me on X, you should be. But he confirmed that he does in fact like sunglasses. So he would not necessarily avoid talking to someone, perhaps maybe future Cash Flow Kings segment, simply due to sunglasses. He does not find them unprofessional, I guess you could say. He said he loves them. So yeah, Raj Grover is not only an excellent CEO, he's also kind of a chill dude. So just one of the things I like to point out. I like a CEO that's got a little bit of personality, you know? I don't like them to be made of cardboard. You know what I mean? Also, back to MP Double Dizzle. There's been a lot of arguing on Discord, link in the description, about when the shorts might, actually start to panic and try to close their positions. I think it's difficult to actually call that ahead of time. Earlier, if you go back months, people were saying, well, it's got to hold the $6 level for that to happen. And then on Discord now, people are saying, well, it's got to hold the $7 level. I think what I've been saying with regards to a potential short squeeze is that it's going to be little by little that the price goes up, and then all at once. So I think it's going to just slowly over time we'll get some kind of jumps, assuming that the short interest doesn't dissipate over time. I think we'll get these slow little jumps. Well, they'll be rapid in the moment, but we'll get these jumps periodically and then these little bleed offs. But the bleed off will not go back quite to the level it was before the run up. And it'll be like basically like taking like 3 steps forward and 1 step back. And it'll happen a few times. And then suddenly, whether it be because of margin calls or because one big short seller, decides enough is enough and tries to cover, you'll get the start of the panic and the stampede towards the exit. I think that's my prognostication on how a short squeeze would go on MPW. And I don't think I can tell you if it's going to be, oh, if it holds the $6 level, or, oh, we need to see it touch 7. I don't really know what exact point that would trigger. And it does stand to reason, like, hey, the dividend is lower than it used to be, and the cost to borrow now, with the rate cut, might be lower, right? So they might be able to afford to handle a little bit more pain than they otherwise would have. And so it might be harder to shake them off, so to speak. So that's just something to keep in mind. Now, granted, on the other hand, the underlying business that is the real estate, the hospital ownership that the company partakes in, should benefit somewhat from rate cuts because it improves their asset values, right? It makes, assuming that their credit rating can get increased, it makes their potential costs of refinancing certain unsecured debt perhaps less over time, while improving the actual real market values and economic cap rates of their assets. That's kind of like the long-term effect of the rate cuts, especially if they continue for over some time. And if they could, once the covenant with their lender is satisfied, which it's a certain number of their assets have to not be tied up in any kind of bankruptcy proceedings. So they need to get Steward off the game board, which we're basically there. I say basically in the sense of like Bruce Campbell in Army of Darkness, when he basically says the words. It's not, I don't think we're 100% rid of all of the Steward stank yet, but we're basically there. Basically. But the market isn't quite giving us that yet. They're not following the bankruptcy proceedings as closely as the people in Discord are. And I think retail has yet to really catch on with this. Short sellers. All right. Paul's making an interesting point here. Short sellers have to cough up the dividends when the time comes. There could also be hard to borrow fees from the broker on top of that. Short selling is no picnic. Yeah. Now, when you say hard to borrow fees, does that mean that just because of lack of availability of the shares to sell short in the first place? I've never actually gone through the process of shorting. I know that there are costs associated. I know that they have to pay the dividend. I know that there's probably interest rates. I don't think I've heard anybody mention the hard to borrow fee, so I'm just curious if that's just due to scarcity of the underlying shares. I'm guessing that based on the context and like what you're calling it. You would have to tell me on that, though. On popular shorts, you have to pay rent. Now, is that different from whatever they're? Because I'm assuming if they're doing it and they have a margin account, that they have to pay their margin interest rate at the same time. Is that in addition to that, or is that just the only thing that they have to pay, and they don't actually have to pay the margin interest rate? I'll again pose that question to you. Don't you love how positive a lot of the articles have turned since the run up too? The roller coaster is going up, guys. The roller coaster is going up. The Stewart settlement is a big deal. Did the short sellers get it wrong? Expect it to keep soaring. Bears caught flat-footed. 10 sweet REITs. The path to gains is clearer than ever. You didn't see any of that when the stock price was $3, and you'd be up almost 100% right now on any shares you bought at that time. Isn't that an interesting coincidence? They may claim to be forward looking, but it's like a quarter or two at most. All right, that's fair enough. That's fair enough. It just it was just interesting to get your insight on that, because my general understanding is that they would generally need to have a margin account and would likely be paying whatever their margin interest rate is, and of course they would have to also cough up the dividend. That was my general understanding of how it would go. I knew that they couldn't do it for free, basically. And the dividend cut makes it actually easier on them, and that's one of the reasons why that's tough. But at the same time, you definitely need the management to be smart about how they're using their cash. And if they can keep the dividend lower while still maintaining a REIT status and use that for liquidity, debt, whatever, I think overall, like in the long run, that's probably better for them to do that rather than just give away all the cash and dividends when they still have some things left that they need to take care of to obliterate the short thesis completely. So while they're in better shape now than maybe what they were at points in the past, they're not like 100% out of the woods on every front. And I try not to be like unrealistically pumpy about it. But I do believe we could certainly, if things just keep on the trajectory they've been on recently, and a few more good things happen than bad things in the near future, whatever it takes, if that rush towards the exit actually happens for the short sellers, then we'll be happy. Anybody that was patient will have their patience rewarded. So I'm excited about that. Now that the market's closed, I am curious how Amazon ended up. Hey, wow. 190, 160. All right. So like a little bit of a mad day from MPW, low volume and everything. Amazon did quite well. I mean, it's a 1% bump, but it looks like it's staying above that 190 to finish the day, which is, I think, a positive development. I don't do any technical analysis. I'm not much of a chart guru here. So my sense of it, though, is if we closed above 190, that's probably a pretty good thing. So I'm encouraged by that. Our friends at HITI, well, this is to be expected after a good earnings. There's a little bit of a run up, the earnings is good, and then the price drops off. I think what it takes is good news about them expanding into other markets. Germany is seemingly the next up. So, which, by the way, Germany is the biggest. It's the biggest economy in the EU. Germany has a very, very large GDP. And so High Tide getting in the door in that market should be very good as long as their business model translates well in Germany, which I would anticipate that it would. I think that they can be as dominant there as they have been and continue to be in Canada. So if they've got the Canadian market and the German market taken by storm and destroy the competition in both countries, I think the market should take notice of that. So I'm just going to be patient. And if it dips below a certain level, add a little bit more. Stick with the plan. The free cash flow looks good. The CEO is cool. He's also an excellent operator and has a good track record of hitting operational targets that they set, and if not exceeding them, actually. Now, this Intel development with Qualcomm, I'm really curious to see what comes out. Now, this could be a thing where it's a rumor, or maybe like they approached them, but maybe they got told to kick rocks. I don't know. I'm interested in hearing more details on the Intel Qualcomm thing. So maybe as more comes out, maybe that'll be like a standalone video at some point. And let's see, BTI barely moved, pretty low volume. I think rate cuts overall are going to be good since it's a pretty high yielder. Your consumer staples like tobacco, things like Coca-Cola and stuff like that, they tend to do well in a rate cutting environment. So I'm going to stay confident in this one, in spite of the fact it's fallen off a little bit over the last few days. And, honestly, with that, I've pretty much covered the ground I wanted to cover. I was hoping to start this at noon and cover the whole power hour. That last hour of the market was open, but got a little bit tied up. Had to quickly get a thumbnail made and all that stuff. And then we started this one off with no audio, so that was a little bit bleh. But hey, what can I say? You live and you learn. Going to head off pretty shortly here, but before I do, I'd like to just remind you all my Discord linked in the description is free. We discuss these stocks very regularly. Anytime there's any kind of major news or developments, you have several dozen people looking over every little thing. It's sort of a force multiplier. I think it's a lot to ask for any one person to do all of the research required to be truly successful and really examine all the angles when it comes to investing. So we have a lot of very intelligent people on there, some with a lot more experience and money and expertise, some maybe a little bit newer, fresher, without as much capital in the markets, but sometimes the fresh eyes bring fresh perspective. And so everybody brings something to the table in the community. So happy to have any new joiners on there. And if you wish to support the channel, you can either be a member, subscribe, like, all of that stuff, or you can also consider checking out the channel partner, which is Moomoo. They have a special offer of 15 free stocks if you deposit $1,000 after signing up with my exclusive link in the description. They have some of the lowest margin rates out there. The most recent I saw was I believe it was 6.8%, but I haven't seen yet if they've changed it with the recent rate drop. So we'll have to see what happens with that. They also do have options available for those of you that have options. And they have over 100 different indicators on their charts that you can use if you're into technical analysis. Brain Dead, we are still live. I have not yet wrapped it up. I was in the process of giving all of my my various plugs to, to try to make some bread off of this. And to get people into Discord, of course. Also, while we're on the subject of plugs, I am on the X platform, or Twitter, whatever you want to call it, at Mr. Macho Mog. I don't only discuss finance on there. I do discuss other topics as well. I definitely enjoy having people follow me on there. I'm trying to get to 500 followers. Getting close. I think I'm over 350, maybe even 360 at this point. I'm having a little contest with the Cashflow Kings Twitter account to see who gets to the 500 first. They're catching up to me. So, well, I kind of partly own that one too. So like I benefit either way. So follow both, but follow me first. That's all I got to say on that. And if you did indeed make it to the end here, I want to say I do appreciate you coming in. And hopefully I'll see you on Discord later. And tomorrow night I will be on the Cashflow Kings live at 8 p.m. Eastern, and we will have a guest. Strongman Personal Finance will be our 50th episode guest. It's going to be a big show. We really hope to see you there. Take it easy, everyone.